All righty. Good evening, everyone. Thank you all for coming. My name is Todd Brous. I'm your host for the evening. I'm here with Susan Schultz and Ashley Wilson, and we would like to welcome everyone to HBAP Startups. So let's get started. For those of you who are new to our startups group, we have a few announcements that we do at the very beginning of each meeting. We're going to do some short networking breakout rooms, and then we'll come back together for our main event. First off is our mission. We're here to help foster and fortify an innovation and entrepreneur community coming out of the Harvard Business Analytics program. And our goal is to provide our members with the tools, knowledge, leadership, and confidence necessary to create and grow their businesses from the ground up. Susan.
And there are tons of ways to stay in touch with us or get in touch with us. The website itself, the YouTube channel where any presenter where we have permission to post their presentations and discussions are there. A newsletter you can sign up for, which is in the chat. If you're in HBAP and still in the Slack channel, it's in the entrepreneurship group. And of course, bring a guest. This is a very cool group of people. And then just a reminder, recordings will be posted publicly on YouTube. So this is a pretty genteel group here, but just a reminder. And then in addition to our really exciting speaker today, and we're also now excited about watching some really cool behavioral things happen, Alon, since you promised us that just now. But the end of January, our own Williamson has written a book called The Web of Causality, Discovering What Really Moves the World. And he's going to talk about that book. And it's pretty cool. So what he's done is he's looked at philosophy, data science, history to really look at cause and effect. And then using modern causal inference techniques. And he also shows a lot of tools through the open source Microsoft's DoY, which is a Python-based library for causal inference and analysis that tries to streamline the adoption of that in machine learning applications. So that ought to be a really cool discussion in January. And then we do have people working on their customer discovery, gathering the data and looking at the results from the workshop we did last year. So that is coming up where people will come back and actually talk about what did they find and what did they learn through customer interviews and all of those things. And then, of course, always an abundant amount of Todd AI and Todd with AI and Todd for AI. So don't forget to go to Thursday's office hours.
Yes, thank you. Yeah, tomorrow night, office hours, lots to cover. And then, this one, sorry.
Yep. Code of conduct, just a reminder, it's an awesome group. We're really focused on collaboration, confidentiality, and trust. Always a reminder that the presenter, we have to make sure that we abide by all the rights that they reserve. We follow our honor codes, and then no personal recordings of our sessions, of course, because we want to honor the presenters' rights for whatever they tell us they want to do. And then always conflict of interest or something interesting that you want to, oh, that's good, Mohit. Yeah, we don't want to see you giving blood. Sorry. Anyway, you got something you want to talk about, give us a call, drop us an email, or if you got something you want to talk about to this group too, let us know.
All right. Awesome. Thank you, Susan. Let's do some breakout rooms. I'll see you all in about 5-6 minutes. All right. Welcome back, everyone. I hope you all had fun in your breakout rooms.
Sorry.
Oh,
sorry. Should have put this on the upcoming stuff. It came up in my group, which I didn't. So I'll just say it and then we'll put it on. So for those people that are in HBAP, don't forget the big fun party June 28th. And there's two things, right? One is the rooms are super expensive, so you should get working on them. Second one is they're going to be asking for people to apply to be a speaker. Like if you did something cool from HBAP, like started a company or got a new job or whatever, And then we'll get more information about like what is it, what's it happening, all that kind of stuff as it goes along. But I just wanted to remind everybody of that because not everybody has really got. I know I got my room already too. Yeah, not everybody has gotten all that communication about that. So I just want to make sure HBAPers know about that. And I'm now going to add it to the slide, Todd, so we have
Okay.
it.
Thanks. All right. Thank you, Susan. So just a little reminder. Oh, you know what? Forget it. I'm not going to remind people to fill out the survey. You're not going to do it anyway. I know. So stop filling out surveys. Don't give your data. Keep it private. I don't care about how it reduces cholesterol levels. So don't worry about the survey. And just as a reminder, yes, this recording will be posted on our YouTube channel. And at the end, we'll stop the recording, but please do stick around for some overtime that will not be recorded. And for tonight, first off, I'd like to thank Kelly Kimball for bringing our next guest to all of us. It is my honor to introduce tonight's guest, Alon Goren. Alon is the founder and managing partner of Draper Goren Blockchain Studio, a venture studio and early stage investment firm dedicated to powering the next generation of blockchain, Web3, AI, fintech, and emerging technology companies. And the Draper in DGB is referring to renowned venture capitalist Tim Draper. Hey, Tim, if you're watching this, how's it going? Alon is one of the rare investors who doesn't wait for perfect traction. He's known for writing the first check early, often when a startup is just two people and an idea. His thesis: invest in the founders, driven by irrational passion, the mission-oriented people, the people who are building not because they want to just make money, but because they have to build and solve a problem. Alon has more than 60 blockchain and crypto venture investments, helping founders with capital, strategy, visibility, and network, not just spreadsheets. But his story didn't start in crypto. Before blockchain became a buzzword, Alon was a pioneer in crowdfunding and online investment technology, co-founding Invested in, a platform that helped democratize how ventures and communities raised capital online. He's also co-founder of major industry events like the LA Blockchain Summit and the Los Angeles Blockchain Week, bringing together founders, investors, and builders to shape the ecosystem. And if that weren't enough, he also built one of Southern California's most active startup communities, 805 Startups, a hub where entrepreneurs connect, collaborate, learn, and grow together. Sounds familiar. Alon is not just an investor, he is a builder of builders. And whether he's writing that first check or hosting events or helping founders navigate the world of emerging technology, he's always doubling down on people first. So buckle up. Tonight's conversation is going to get real. It's going to get insightful. And statistically speaking, I'm 95% confident that we're going to learn something new. So now, without further ado, as is our custom here at HBAP Startups, if we could all please briefly unmute ourselves. And let's give a warm round of applause to Alon Goren.
Woohoo!
Alon, thank you for joining us tonight. How's it going?
Going great. Thank you for having me. Like I said before, I think I'm gonna bring you to every event and networking thing I ever go to, so you could just repeat that, you
I'm in,
know.
man. You know I'm in, right?
I need a hype man. This is great.
Thank you so much. So, by the way, tonight the format for tonight is going to be a little bit of a fireside chat, and we're going to have a little bit of discussion. And at the end, we'll open it up for some Q&A. So, feel free to write down your questions, and we'll come to them later on. But I'm doing tons of homework on what you do, and one of the things that stood out to me was that you're a punk rock venture capitalist. I saw you talking about that. I'd love to hear how you became a punk rock VC.
Well, when you're obsessed with something growing up, you try not to grow up. I think that's really it. I'm sitting here trying not to ADD ask you what kind of guitar and amp that is behind you and stuff.
Oh,
But the I grew up in Southern California. My older brother discovered a band called Bad Religion when he was in high school. I'm 4 years younger than him. And, as a little brother, listening to what my brother listened to, I became just as obsessed as him, if not more. And Southern California punk rock bands were really important to me growing up. And in high school, I joined a band with my friends, and we had a lot of fun. And so I kind of realized, not to get into the what the rest of the questions and stuff might be. I kind of realized a lot of the things I learned literally putting together punk rock shows in an environment where most venues and groups and places didn't like or want punk rock shows, uh, really taught me a lot of lessons about entrepreneurship and how to build a company and how to just do marketing in general. Not that much different selling a product on the internet versus, trying to get people to show up at a venue for a band they never heard of. There's a lot of overlapping lessons in all of that.
That's fantastic. Working as a venture capitalist, it's the two people in an idea. How are you
Yeah.
managing that? It seems like most people aren't going to be interested in just that such an early stage and high risk investment.
Well, yeah, they're not. So early stage was always the hardest for me when I was starting my own company. I didn't fully understand why at some points because when you're young and you think you're a hot shot, and I got really lucky that I happened to work at a company. I got a job at MySpace, and I thought, oh man, I worked at MySpace. Everyone's gonna want to invest in me. I'm the coolest guy in the world. This was before the downfall when it was still like the most trafficked website on the internet. And Didn't know what I didn't know. And what I learned over time is that there's a certain category of people who are starting companies not because they discovered a business model or an opportunity that could be profitable, right? Um, they're doing it because they absolutely have to. They have no choice but to do it because they're absolutely obsessed with fixing some problem or doing something. And it's just who they are in that moment of their life. And it's kind of infectious. So I found a way to make helping folks like that my full-time job. And it was kind of by accident, but it ended up being, the perfect place for me and now my partners. But the main thing is that it's just um, you're asking about how two people an idea or how even one person an idea. It's really the people. And it doesn't always work out, obviously, but investing in early stage startups is a numbers game, and it doesn't always work out. In most cases, actually, it doesn't work out in the way that you want it to work out. And you kind of just go by the people and the problem they want to solve. And if you believe that when they hit a brick wall, they're going to dust themselves off and run back into it, maybe with a different plan, or try to find their way around it, those are the people you want to have on your team, right? And those are the people you go, okay, if I'm locked in a room with this person for the next 10 years, I'm going to really like that,
You're getting
and then you
married,
go from
basically.
there. Yeah, you are. And it's it's crazy. We actually our logo, this is totally by accident. And then we added the symbolism after the fact, but we were trying something with our logo with DGB. And the designer gave us one where the letters were kind of these block letters, but the B was in italics. And I was looking at the hole in the D and the middle of the G because they used a lowercase one, but it was like block. And I was like, oh, that's kind of cool with the italics B. It looks like a dot dot slash.
Yes.
And being a computer nerd, I was like, that takes you up to the parent directory. And we call
Yes.
ourselves the parent company. And we kind of started going by that symbolism. We added the dot dot slash to our logo, and we start calling all of our companies related companies because in hindsight, it made perfect sense. But when we first started, we'd meet a company, we'd absolutely fall in love with the founders, we would work with them. And then inevitably, we would find complementary companies to invest in because our introductions and the network and world that we lived in was based around that company. And so we'd end up building another company or working with another company that's complementary, and then another one that's complementary to those two. And what we found is there's kind of a few categories within our portfolio that all complement each other, are customers or drivers of business to each other's businesses. And so we call them related companies, and we kind of talk to the founders and try to connect them, as if they're family and siblings, and work together in different ways.
And the I was so I'm I work as a I teach designers and
Yeah.
teach artists about artificial intelligence. And
Mhm.
I noticed your logo and I was like, that's Unix. I love that. That responds perfectly. And I understood that that is up a directory. That is the parent folder. That is perfect symbolism. And I was literally going to call that out and I didn't do it and I should have.
Love it. Love it.
Absolutely
Yeah, you
fantastic.
know,
So no.
I am very artistic and like I like doing things. I mean, I have a sketchbook in front of me and I draw pictures and make music and do things like that. But it's very funny in that with work, I like doing product stuff. I like making sure everything's pixel perfect and the product looks good and all those kind of things from a product and usability standpoint and all that. But I'm very much in awe. I have a cousin that's a designer and he's an artist too. And every time he's the one who's made 90% of the logos for the companies I've been involved with over the years. And I'm always in awe of him because I get on a call with him and he has so much symbolism attached to every little design and thing and looks at it in a completely different way than me. That, you know, when these things come together, it's exciting to me. I don't know. I like it.
Yeah, so many people just ignore design, and even though it's important, it still can be ignored. I know it's a problem. But so anyway, going back to the venture capital stuff with the two people and an
Yeah,
idea, I saw something you said, be the cockroach, and to me that was like
yeah.
all about resilience. And
That's
how do you guide two people in with an idea to be the cockroach when they don't know if they're going to be successful?
Yeah, and I'll tell you where that stems from. And that's not my saying. So I'm going to give all the credit to Adam Draper. He's Tim Draper's son. He's actually probably the reason why I'm working with Tim Draper today. So we could go into that story after, but
Oh yeah, please.
I can go in too many ways. So I'm going to try to keep it somewhat concise when you ask a question. So the be the cockroach thing is kind of it stems out of Adam Draper does a incubator called Boost VC. You know, other than DGB, if I was an entrepreneur and I wanted to join an accelerator program and I was building in a category that they're looking at or that we're looking at, other than DGB, you know, and maybe even more than DGB, Boost is amazing. They're the best, and the reason why also is the people. Adam and his partner Brayton, and now he brought on Maddie and a few others as partners. They're incredible, and they were early Bitcoin investors and doing things in the crypto space. And in general, startups are a roller coaster ride of ups and downs, right? And you may raise a lot of money and you may not be able to raise money for a very long time again because of the industry you're in, because of external reasons, internal reasons, things beyond your control. It might be hard to raise money again. So the be the cockroach saying that they gave, they basically said it because they were trying to instill in their founders that you have to be able to survive the nuclear winter, right? You have to know that if, you know, the world is falling apart, you and your partner or partners will make it through to the other side. Because, and I know you in the notes asked me a question about this, so we may get into some of these things, but like you have to set yourself up for that, and you have to be able to survive because most startups have near failures along the way, or what feel like near failures, or feelings of oh my gosh, I'm 1 month away from being out of business. And then they become Facebook or Uber or some of the biggest companies in the whole world. If you ask the founders, were there times where you thought, this is it? And almost every single one, if not all of them, will tell you absolutely there were times like that. And that's where that be the cockroach saying comes. And it's kind of been co-opted by people like us and the rest of the Draper network because it's kind of a brilliant and fun saying, especially if you've been in the crypto space with the ups and downs, and it's kind of like an amplified version of the traditional startup world and a compressed timeline.
So and you mentioned the crypto, which we have to get into, because I'm like my question for crypto is, well, from a VC, from a startup, are you guys only focusing on crypto related investments this in terms of your portfolio, or
Yeah.
are you? beyond that?
No, we're not. We're well beyond it. And I was just telling David on the when we were in the breakout room. So he's hearing me repeat something. But I look at I first off, we never were only crypto. Um, and I think of blockchain as separate from crypto. And I know a lot of people kind of combine them. I think nowadays people understand the difference between like Bitcoin and doing something on the blockchain or doing, a coin with a dog's face on it or something. But there's obvious differences there. And so I look at blockchain as an infrastructure. I look at it as a verifiable database and what can be built on top of that, almost everything. And 10 years ago or so, maybe a little longer, if you were pitching an investor and you were starting a company, you would clarify that I am starting an internet company. Maybe you would say I'm starting a social media company. That's drilling down into a smaller category. But in general, if you're launching a tech company, you would say, in some parts of the world, they would say, I'm starting a high tech company. Like they would say high tech, like one word. Um, Maybe it's my Israeli family kind of fitting into coming into my head, but they would say, I'm starting a high tech company or I'm starting an internet company. I think 10 years from now, you're not going to be giving differentiators saying, I'm starting a blockchain company or even starting an AI company, if we're going to talk about another category. You're just going to be starting a company.
Starting a company.
And the infrastructure will be the infrastructure you choose. We're not talking about Zoom and going, well, Zoom uses these 7 or 8 or 15 programming languages and technologies and server types and different things to create this software that we're all using, which some of us are using on PCs, some are using on Mac, some might be using on an Android phone or an Android tablet, some might be using on an iPhone. There's probably 20, 30 different types of languages and products that they're using within their own infrastructure to create this amazing video call that we're doing right now. And blockchain will just be one of them, especially in a world with AI, especially because it's getting harder and harder to verify what's real.
Secretary Paul Atkins said all financial markets should transition to blockchain. So is that within a few years? Is that
Yeah.
what's your thought on that?
I'm well from his mouth to God's ears for my own personal reasons, if I'm going to be a little selfish. But honestly, I think it's absolutely necessary, and I think it's just the next step in digitization. So when I was doing my company Invested In, we were building crowdfunding platforms as a service for a lot of different groups, and we decided we were going to swing for the fences one day. And we continued to service our clients, but take on no new clients. And we were going to build an online investment platform ourselves for a certain category that we felt was underserved, which was not huge institutions raising billions of dollars and not the smaller players who were using the crowdfunding sites, but these intermediary people, funds raising a few $100 million. Like that was the category we decided to go after. We thought we were incredibly smart. We had an awesome plan. We had all the legal put together where bankers, actual licensed bankers, actually could do co-marketing agreements with other bankers and actually make money for introducing investors to their deals and things like that. But all the legal put together. And at the end of the day, what we learned was nobody trusted us. Nobody trusted putting their contacts on the internet. Somebody who makes a living introducing investors to investment opportunities did not trust that we weren't going to circumvent them, no matter how transparent we tried to be, no matter how many legal documents we put in front of them saying we will not do it. Nobody trusted us. Cut to about 10 years later, I could now build that product with full trust and transparency where they can own a contact and know that as long as they stay licensed, they can earn a fee off of those things. It just didn't exist back then. The culture was also different about investing on the internet and doing certain types of things that now is gone. But that was a step in digitization of an investment opportunity that was too early at the time. With the blockchain, it's not. But just if you think of an example of that, if you would have asked me back then, is the investment in your company a digital investment? Is it a digital asset? I would have said yes, because I never printed a single convertible note or equity agreement. I literally would send it via, at the time, Sign Now, because I think it might have been pre-DocuSign even. Every investor got the PDF and signed it online, and I countersigned it online, and I would have said that's a digital investment. Is that more efficient than printing a piece of paper, collecting a check, and doing all that? Yes, it is. Is it what we think today a digital investment would be? Absolutely not. Because today we would want to track that investment. We'd want to receive waterfalls from that investment directly to our bank account. We'd want it to happen in real time. You'd want to just go to a dashboard and see how much is owed to you. Maybe not a startup investment, but let's say you're invested in a real estate fund or something that earns you interest. You want to see that stuff in real time. And I think that's where we're going with all when Atkins talks about, he talks about super apps, financial super apps on chain. I know this because one of our portfolio companies rebranded something they were launching into the super app store the second Atkins said it. But the whole point is that when you receive a share of stock, whether it's a private company or public, they're going to start with public companies because it's easier to digitize and things like that. You want proof that it belongs to you. You want to know there isn't some funny business. Remember the stuff that was happening with Robinhood, where they were actually like selling more shares than actually existed because the clearinghouses weren't verifying things properly, and too many people on the internet decided to buy shares at the same time. That should never happen, right? You shouldn't be able to short a stock with more shares than actually exist of the stock, and things like that. And verifying these things on a database that's immutable and can't be messed with is really important, and it's going to happen times all of our industries in ways we don't realize.
So which was the portfolio company? Was it Onera?
Yes.
Oh, okay.
Onera is actually it's a good example actually of Kelly and I know each other through CLU, a university that we're both on the board of an entrepreneurship program that's next to us. And I helped start that company while working in an office in at Hub 101, their co-working spot at the time. This was in end of 2017, early 2018.
Oops, sorry, mute that.
Oh, no worries. So anyway, they started with a problem that, believing that these things were going to be digitized. How they attacked the problem was completely different back then as to what is happening now. A bunch of hundreds of startups are doing what they originally set out to do, and they changed directions over COVID, actually, to create a consortium of financial institutions who plan on digitizing their shares. And now what they've created is a layer that they call it's kind of like an app layer, a consensus layer that allows the different groups building in different blockchains and different jurisdictions in the world to interact with each other the way that they want to. So that if you have a Schwab account, you could buy products from someone who's tokenizing at the London Stock Exchange or whatever. And the reason why that's important is in the at least blockchain digitized, tokenized world, every single asset exists in a silo. So if you have money and you want to buy Todd's product, you'd have to take the money maybe from your Schwab account, wire it to your checking account, go create a new account in a new place, wire money there, do KYC and all of the documentation to prove that you're allowed to purchase this product in a new place, and then purchase it. With stocks and things like that, and most investment opportunities that the average person interacts with, you could just buy it from your Fidelity account or buy it from your Schwab account or buy it from your phone on Robinhood. The reason for that is because for the public markets world, there's clearinghouses that are using one of maybe three API providers, technology providers that give them access into NASDAQ and the New York Stock Exchange and the Nikkei and all the rest. And they're building that for the tokenized world.
And I'm not an expert when it comes to blockchain or Bitcoin and crypto. So if you're speaking to a person who doesn't understand all of this stuff and if just they're a beginner, how would you explain this to them? Like everything from the real world assets to these to NFTs and stuff like that.
Yeah. What I just say is that, it's just the next step in digitization and creating more layers of features on top of real proof, right? So if Todd has a share in something, you can absolutely prove that Todd is the owner of that share. And then on top of it, you can add features that don't exist, that wouldn't even be possible on a piece of paper. It's easy to go, okay, I looked online and Todd owns that house.
But
Great.
what about having privacy
Yeah,
though? Doesn't this get rid of privacy? Like if I want to
well,
do a side deal and
yeah.
exchange some cash, that goes away.
Well, there's privacy preserving products that can, create escrow and do things like all the features that you might want in a digital transaction, but that could obfuscate your actual name. So you should be able to do bigger private things that in the real world would be really hard to do because you're not going to carry suitcases full of cash or whatever. The issue,
Right. We
the
could.
main, yeah, you could,
We
and that
could.
you could. Um, and there's a flip side to it because what's interesting is that most of the things are pseudo-anonymous. So you kind of hide your name and there's just an address or whatever. But at the end of the day, if people do research, we had at our conference, and this was years ago, we had actual law enforcement agents from FBI participate who were in charge of digital and folks from the SEC, obviously. And every person who is kind of a law enforcement agent from all of the different groups, 100% of the time said it's easier to catch a criminal that does something on chain than the traditional world where they're using cash for drugs and things like that. 100%, if they were chasing a criminal, they'd rather them do stuff with Bitcoin than they would offline. Now, there are more sophisticated hiding tools today and privacy tools today than there were a few years ago. So people are doing it, but the governments are driving that, to be honest, because the governments are trying to push these really I want to use a word that's less or more politically correct, but they're just pushing these rules onto the space and into the environment where they're trying to say every transaction, $500 or more is going to have to be tracked and traced and this and that. And that's a little scary to people who want to preserve the privacy and want to be able to do those transactions and stuff. I'm not the right person to ask because I'm so transparent. I'm like, I'm cool with everyone seeing everything. But I understand the freedom argument of those things. And honestly, the people who push against that the most are the bad governments in the world, more than criminals.
I mean,
Yeah.
I'll push against that. If you are against the current administration, regardless of your political beliefs, in any side of that, and there's no privacy, how do you exist in a democracy? I think that there's a big problem there.
Well, no matter who is the administration, right? Um, people, you have a right to privacy. You have a right to, especially certain types of privacy. And so these things can enable that. And you should have a right to be able to kind of disconnect from your government when it comes to at least certain aspects, right? If you are here in the United States and you're on a city street in a city you chose to be in, I mean, some people are just born in certain places that you have those arguments, but you know what I'm saying? Like, you have to abide by those rules and laws, right? You got to pay the taxes, do the things, and all that. But if you decide I don't want to hold US dollars, I want to hold another government's currency, you can do that. And if you want to find a digital currency that is disconnected or hopes to be disconnected from all of that, you should be able to do that too. And I think, that was a big driver and motivator for the freedom fighter group of Bitcoiners in the early days. I remember doing a talk with Adam Draper, the guy who I mentioned earlier, in 2015 at a local thing. We had about 100 people there talking about Bitcoin, and he was explaining the freedom aspects of it. And he said, here's all you need to know. Literally that week, bombs were being dropped on Iran, and people in Iran were using a thing. There was a thing back then called, it still exists, called local Bitcoins. And it
Mm.
was meant to be a matchmaking service to meet people in real life to trade dollars for Bitcoin in person. So like for privacy reasons and things like that. So nothing happens. So it's not like you're using a credit card. You're actually transacting that way. And utilizing that service at the time, people in Iran were buying Bitcoin at double the price anywhere
Wow.
else in the world. Because in that moment, they thought if our government uh, just tries to start taking our assets and do things like that, we need to have our assets in something they can't confiscate from us. And that's how he basically converted me to go, oh my gosh, I get it now. Because as an American, you're going, this is only marginally different than me. I never go to the bank. My paycheck just goes to the bank. I use a card. It's all digital anyway. But then when you start thinking about that, and unfortunately, since then, we've had those feelings more and more as Americans. I don't think we have an ounce of worry compared to those who live in Iran. Thank goodness for us, I guess. But we there is absolutely an argument to be made by that. Um, yeah.
Where do you predict this going then, from government and societal? Is everything going to transition? Banks are going to be all blockchain now? Is that?
Uh, Honestly, yes, I think banks will utilize the technology because it does streamline the process. It can, and it can bring down costs and make things more efficient. Those are the things they're going to use. And when it comes to uh, the government stuff with Bitcoin and all that, I think it's kind of being co-opted by all the world's governments and stuff like that. So I'm not sure the freedom part will be the utopia we wish for, but from
Mm.
the hey, we're building efficient businesses today. Will it be more efficient? Yes. Will more people potentially be able to participate? Yes. I think DeFi and things like that are going to drive down costs for the rest of us because most of us are not going to go on chain, use confusing and hard to use wallets and stuff like that to do complicated transactions on the internet. But those complicated transactions will exist. They'll have a much higher yield than your Wells Fargo savings account. And
Mm.
eventually, there's going to be apps and ways that make it easier. And when every single person can go on their phone and get 5, 7, 8% interest in a savings account, eventually Wells Fargo will have to compete or go out of business.
All right.
And they'll compete.
Explain
Yeah.
DeFi for me.
Yeah. DeFi stands for decentralized finance. So it's kind of finance through the crypto rails. And yeah, adoption is increasing. And I wasn't looking at the chat, so I'm sorry that I might have.
Oh, that's okay.
Yes. So where, for example, when we use Robinhood as that example, you buy a share of Tesla stock. There is a clearinghouse. They do that transaction. They earn some spread. They earn some transaction fees, and they do that, and they make that money by providing liquidity. Sometimes market makers provide liquidity for these things and all that. And basically, what they're doing is they have shares on one side, they have capital on the other. When you want shares, you're buying the shares, and their capital increases and they're creating this balance, right? All day long with shares and money, shares and money. That's how liquidity works, right? And that when there's more money and less shares available, the shares are worth more. When there's more shares and less money, right? And so there's a balance. There's smart contracts. There's a product called Uniswap that exists that just does that all day long for crypto tokens, right?
Mhm.
And it's more sophisticated than that now over time, but that's how it originally started. Literally just there's a tool called Balancer, and that's all it would do. I can provide liquidity on Uniswap or Balancer myself, and now I become the exchange. So not that I am actually doing the exchanging, but if I'm holding Bitcoin and I'm holding US dollars, I can provide liquidity and I'll collect the fees. If there's a lot of volume being traded, I will make more fees. Instead of NASDAQ making the fees, there's a tool that does that, right? I have a partner in DGB, David Rankin, our COO, is obsessed with liquidity pools. And he's, any chance you get, he wants to talk about liquidity pools and DeFi. But where I'm getting at with all of this is to go back to your original question. I'm talking too much about it.
No, it's good.
Decentralized finance allows us to participate and we get to reap the rewards. That's it. So when our bank decides to charge us all these fees and all that, if I'm a Wells Fargo client for 50 years and I have $100,000 in my bank account for those 50 years, other than the fees I pay them and some okay services, I'm not getting anything, right? Imagine a community bank, what it was originally meant to be was for the community it was in, and everyone in the community is enriched when more people borrow money and pay it back and do all these things. Now, that's kind of what DeFi started doing. It kind of brings us back to the original community banks and how they were built to actually help the communities that are participating. And so anyway, because of that, some of those products generate a lot of fees, and a lot of us can participate in those and receive yield that is just impossible to get at a traditional bank because they don't offer it and they have overhead that these startups and the internet doesn't have.
This sounds incredible to me. What's the tipping point? Why? How come I'm not using this? How come everyone around us isn't using this?
It's hard to use. It's scary to use. It's not the user interface any of us are used to dealing with. You sometimes even, and this is like part of the culture of the crypto space that is both awesome and ridiculous. Sometimes the founder and engineer who built these products is a pseudo anonymous Twitter account that's, a picture of a monkey, and you're like, I have to I remember there was a moment in one of our conferences where I met some guy and he's like, "Oh, Alon, it's so great to meet you." And I was like, "I don't know you." He goes, "Oh, I'm so sorry. It's what was his name?"
Another monkey picture.
It wasn't a monkey picture. He's like, "It's Squiddy Lips" or something like that. And I'm like, "Oh, bro." And we like hugged it out. And I'm like, I've known this guy for years, but none of these people use their real names on the internet. Now try to explain to the largest category of people who actually have money to be investing and spending are those in the older category in our country. Try to explain to my parents, you're going to use this product, you're going to earn 10% yield instead of the 2% you're getting at the bank. Oh, who built this? Oh, it was built by Squiddy Lips or one of these accounts.
So to me, that's a trust problem. Like again, so you mentioned complexity. It's really hard to use these tools. So clearly there's an opportunity for businesses, startups, and I'm assuming some of your portfolio to make it easier. But now we need to trust this technology so that you get global adoption. Or is this really just for for shady deals here?
No, it's here. The beauty is that it's not most of the DeFi stuff is like most of the volume is Ethereum and Bitcoin and not shady stuff. And most of the people who are getting the fees are the biggest whales who put the most money in.
Right.
But the beauty is that if you have $10 million to put in and you're earning 5%, I can put in $1,000 and earn 5%. I can put in $100 and earn 5%, whatever's meaningful to me. And that's part of the beauty, because in the traditional banking world, if I'm one of the top clients, again, I'll just keep saying Wells Fargo, but if I'm one of the top clients at my bank, I could call them up. I can get special access. I can do certain things that the person who has $1,000 in their bank account can't. And that's part of this beauty of DeFi and the kind of, again, the freedom promise of it. And I think that there are opportunities in streamlining that process. That's what a lot of people are doing, but it's kind of like I see it as kind of two ends of a spectrum. And I used to always like throw my hands up when I was pitching this to investors for our own fund. And I'd say, there's the Wild West DeFi stuff. It's using the technology to circumvent the regulation, just completely go around it. And we're just going to build the best product regardless of what regulatory stuff is. Now people are getting smart enough to go, okay, if we're building in DeFi, we're still going to not allow this country to do it, not allow this country to do it, not allow this country. I saw that World Liberty Financial, which is the Trump family's DeFi thing that they're doing, that they're at least endorsing and participating in, launched a few days ago.
Yeah.
United States and a bunch of other countries in the Western world are blocked from participating so far because of our own regulation in our country, not allowing people to participate in these things until you've KYC'd and done proper stuff. But people in the rest of the world are participating, which is interesting, or people who are using VPNs and hiding their identities. And I don't recommend that as an American. You can get a lot of trouble. The people will get in more trouble than you being the participant, but it's just something you shouldn't do. But
But look,
yeah,
when it comes to regulation, I'm very ambivalent. Like,
yeah,
no regulation, deregulate, and then I'm like, well, but we kind of need to protect people and
yes.
governments and the world. So how do you navigate that?
So yeah, the way I look at it is the regulation, as much as it's needed in some ways, like I think the end goal is what they want to do, right? Like crowdfunding, where I came from before, right? I didn't believe that they would sign the Jobs Act. The Jobs Act is what allowed people to start investing in private shares on the internet. There's a bunch of rules and caveats and hoops you have to jump through, but I didn't even believe that would pass. But it did, because a genius renamed it the Jobs Act, and it was right after the financial crisis, and no politician could vote against something called the Jobs Act. And it was all marketing. It was great. I was really happy. Then they made all these rules. The whole rules were there to protect investors. But one of the rules that they were proposing was, okay, you can't participate. You can participate up to a certain dollar amount unless you're a millionaire, unless you're an accredited investor, and then you can participate more. And I said, that's kind of offensive. You don't, Vegas doesn't have a door that you walk through that goes, are you wealthy enough to lose your money? And I thought that wasn't very fair. And then
But is
one
it
of the
really a
politicians,
gamble? Are you talking about gambling, or are you talking about investment?
no, I'm talking about investing in startups. It should be less than It should be less risky than gambling. But I'm
Okay.
just saying they basically put this wall in front of us to say you're not allowed to participate unless you're an accredited investor. Unless you're a millionaire, or you make a certain few $100,000 a year, you can't participate. But with the Jobs Act, you could participate in some, but only up to a few $1,000s a year. Now, one of the politicians proposed something that a lot of people liked, and I found incredibly offensive, which was this got me a lot of followers in the space, but also a lot of haters amongst the lobbyist people who were my
Good to be
friends too,
controversial.
because they're like, anything is better than nothing. And what they proposed was, well, if you're not a millionaire, you could take a suitability test. And basically, I was like, wait, so you're saying if you're poor, you're dumb, but if you can pass a test, we'll allow you in. And it was like, it just felt offensive and crazy. And the whole thing was bonkers. But what I'm getting at with regulation is that, what did they want to do? They want to protect investors. Now we have such a bloated bureaucracy with way too many rules that instead there's no way to just make common sense investor laws. I feel, that you could probably have done something where it's like, if people are defrauded by a fake entrepreneur who basically commits fraud, make those penalties 10 times worse or something like that. Really actually catch the criminals versus stopping us from being allowed to participate in investing in the only category of investment that could create generational wealth for our families, right? And so it's that's what we were
There's
going.
got to
Yeah,
be some lower bound here. There's got to be some
absolutely.
boundaries to this. Like, if you're a 16-year-old kid gamer on Discord who's making trades, like, do you really
Yeah.
think that this person is qualified to make any kind? No, they're not.
No, but they might be more qualified to make an investment in a gaming startup than one of our parents who actually has the capital to make an investment in a gaming startup. So
That I
somebody can
agree.
go to them and say, invest in my gaming startup. That 16-year-old will look at it and be like, that 16-year-old would pass the gaming startup suitability test, and my parents wouldn't. And I could probably defraud somebody much easier than that 16-year-old when it comes to that category, right? I'm making up a silly thing, but it's in general, like, when you start thinking through some of these um, things, it's silly, right? It just doesn't make sense. Anyway, I was going back to the DeFi thing.
Yeah, sorry.
Basically, all there is there's this technology can be used. Yeah, you can use it to circumvent regulation. You can even try to break the law with it. You can do all these things. That's one side of the spectrum. The other side of the spectrum is amazing technology that, if you use it right, you can hit regulation head on, comply with all the regulation, and make it significantly less of a headache, right? Just like imagine having to verify your identity at a banking institution or something like that just 10, 15 years ago. have to go in, show them your ID, maybe bring in another credit card or another form of ID, do this thing, do that thing. Think about signing up to an app like Robinhood and stuff today. You show your ID to the camera, it scans it, it looks at your face, and it does some facial recognition stuff, looks up your address, asks you a question or two, and you're in. 30 seconds versus a 20-minute drive and an hour in a bank. That's what this technology is capable of doing, right? If you're suitable to make an investment in my product will show up to you and you'll be able to purchase it. If my product isn't suitable for you, it won't even show it to you, right? Like we can build all these filters and all these things in different products. So I tend to look at stuff on both sides of the spectrum because I think it's important. And then I like to look at the infrastructure for it.
But then the problem is who controls that filter?
The front end of the product, right? So imagine,
but again, that's a freedom problem. So like if there's a government controlling that filter versus an organization,
the government can't, right?
Versus my mom and dad.
So that's the beauty of, in the DeFi world, there is no government providing the filter. Uniswap provides the filter, and you trust them as the front end interface. And by the way, if there is no Uniswap, you can still access it through behind the scenes through the blockchain and still transact the way you want. In the Onera legal and compliant version of working on chain, the products are being brought to you by regulated financial institutions, by Citibank, by JP Morgan, by the London Stock Exchange Group. And each person who signs up fits into a certain category. An American citizen that is not an accredited investor, an American citizen that is a Singaporean citizen that is a qualified investor, a this, a that. All the institutions sign up, all these different groups, and then they're providing an infrastructure where the London Stock Exchange Group can show what products they want to show their clients. And Citibank can show what products they want to show their clients. And you trust the interface, right?
Right.
It's kind of like you might love jeans, and you might love jeans of a certain brand, but you walked into the Levi's store, so you're gonna buy Levi's, right? Or you walk into a different brand, or you walk into Macy's and they have Levi's and the other brand, right? And so people will pick and choose where they go and what they want to do, and that's kind of the beauty of it all. Or you go on Amazon, you can buy anything you want, right? It's and it goes into every other category too, not just blockchain, obviously, just digitization.
Awesome. Yeah, an education in this entire universe. I feel like we've got a long way to go before this becomes completely mainstream. And part of me is thinking about artificial intelligence and how the future of work and all of these businesses and organizations are going to be changing very, very rapidly. How does this DeFi and how does this stuff tie into where we're going with artificial intelligence?
I think it's puzzle pieces. One, if a digital asset is truly digital and there's liquidity for it to be bought and sold, AI agents will be able to transact instantly and faster than any of us can think about it. It has the possibility to create just much more efficient markets in a million different categories. And so I think DeFi is a puzzle piece that goes along with AI. I think that if you don't even look at the DeFi side, if you look at the traditional side of things, right? I saw if you guys know what OCR is, it's optical character recognition, right? Yeah. So you would scan a document and it was a big deal when OCR could read handwriting sometimes. And if it's messy, it's messy. And there was a lot of if this, then that, very simple, smart rules. And I'm holding up smart in quotes, right? For OCR services. And I helped start a company many years ago that was reading invoices and helping small public companies do their accounting better using OCR. And then they were trying to do some basics of early AI stuff to read these things and stuff like that. I met a company today that was pre-filling a digital manifest for trucking companies where the trucker literally just pulled out his phone and took a actual carbon copy invoice because they needed to have things in triplicate because of the regulation in that particular industry. They literally just scanned over it, and it pre-filled out a form that used to take them 15, 20 minutes to sit in their truck and fill out the form. And almost everything was pre-filled out on a bunch of dirty, dirty invoices that had grease on them or a coffee stain or whatever, that were going from truck to landfill to truck to, all these things. And it's all being digitized, right? Does that need to be on chain? I don't know, but it could.
Well,
If
that
for
stuff could be
verifiable reasons,
internal.
but
You could
exactly.
put that internal.
Yeah, and to know that, an accountant didn't change the date on something when they realized their friend was a day late on their payment or something like that, right? Or when Wells Fargo decides to create thousands of new accounts for their customers without their permission, or whatever,
Oh,
things
like that would never happen.
that would never
That would
happen.
never happen.
And it's it's where I'm getting at is that the AI side of it. Is that an AI startup? Is that an AI company? No, they're a logistics company that's providing services. But AI just made their industry significantly more efficient and better, and have less typos, less problems, and just made it better in a million different ways.
I would argue
Yeah.
that you've completely removed a human from that job.
Well, you remove the human that used to take those stacks of papers at the end of the day and reconcile them and figure out what went wrong and what's going on. My dad owned an auto parts shop growing up. His partner loved me. But he would go at the end of the day, they literally had a drawer. It wasn't even like a cash register. They had a drawer that had all the invoices in it, had all the checks in a box, and cash also. And at the end of the day, he'd be like, there's $3 missing. And he'd be racking his brain. Why is there $3 missing? And I remember going like, who cares? Just $3, whatever, And my dad's partner used to go nuts. And then I would go, oh, I took $3 to go next door to Fish and Chips and buy a soda and some French fries. And he'd go, oh, great. He'd close the book, so we're done. He just wanted to know what happened to the $3, right? But think about if you are, again, I'm going to use the example from one of our companies or potential companies. If you're at a landfill that just had 1,000 people come through to drop off the remains from the Palisades fires, there's all these regulations and issues you have and stacks of paper, right? And if you just are missing one of those papers, you can't read the name, or your system says one name because Kimball is spelled with 2 L's, not 1 L on Kelly's name, and now this whole thing doesn't reconcile, right? There's all these simple things that make data entry stuff really hard. And this fixes it. Or this can even go, oh, we found a mistake. We think this is it. Can you take a look? I don't know if you guys use like Google Photos and stuff like that, but I do all the time. And how it'll pop up somebody's face and be like your wife's face and be like, is this the same person? Can you confirm? Because it's like just not sure. And you're making the system smarter by doing that. Imagine that, but for everything, right? So AI will transform and be a puzzle piece into it. And also the world that will be created by more digitization and AI lines up perfectly with the world that's being created with these financial markets on chain. And so we, for example, talk about related companies. We incubated a mortgage company because we believe in the future, not yet, behind the scenes, right, starting now, but in the future, even on the front end, you could get people more efficient mortgages and either have higher returns as a mortgage company or provide better rates, or both, and or create better rates for consumers, right? And if there is a world where mortgages are digitized, wouldn't it be great if we actually had verifiable proof of the appraisals for all of these homes? Not the Zillow estimate, not what, you lick your finger, put your finger in the air and see which way the wind is blowing estimate of the value of the house. Actual appraisals that are approved by the GSEs, I'm talking about the government agencies, the groups like Fannie Mae and Freddie Mac, and their insurable value, because you can't get insurance on a home until there's a proper legal appraisal. So what did we do? We actually met a young man who was starting a new appraisal company, and we started building it with him. It's called Ivory, AIVRE. It actually stands for AI Valuation of Real Estate. They're basically streamlining the process of doing appraisals from 5 hours of work time for an appraiser to less than 15 minutes.
Oh, this is brilliant.
Right? And the beauty is not that, oh, that appraisal that used to cost you $1,000 in 5 business days is now going to get to you faster. It will. But the beauty is that it's all digital, it's all fast, and we know that there's a future where titles and mortgages are going to be coming on chain, right? And if titles and mortgages are going to be coming on chain, how do you trust the value of that when you decide to buy 500 mortgages? Today, banks actually buy and sell books of business, like big packages, 500 mortgages. And they go, this is Southern California, this zip code, 400 mortgages. And they sell it, and they have to discount the book based on a certain percentage. Statistically, the houses are going to be dilapidated. People might be behind on their payment, but they literally don't have a digital verifiable way of actually knowing any of this stuff. But imagine if every one of those had a timestamp and a date with an actual insurable value. That doesn't even happen. They just assume a certain percentage are falling apart, and they have to adjust the prices for that. And there's an example one of our advisors used to give us. He was the former vice chairman of NASDAQ. He used to work in the bond market. And he said when bonds stopped being calculated annually, when computers came around, they would be calculated twice a year, then every quarter. Now they do them once a month. But when they went from annual to quarterly, those bonds traded at a 2% premium. 2% was really, really meaningful. And if you sold it a day before it distributed the interest, it was one price. If it was the day after, it's another price, right? And now things can be distributed instantly. So things can actually have accurate pricing without those inefficiencies. Now that kills a certain market. People are doing arbitrage and people who are willing to wait and buy and sell. But again, we're creating more efficient markets. And the benefits, I think, are going to go to the consumer at the end of the day, because if mortgages are cheaper and mortgages are easier to administer, we should all get better rates. Because the people who give the better rates are going to get more customers, are going to sell more mortgages, and the economies of scale. And so that's where the beauty comes in with things like AI. Will Ivory ever do things on chain themselves? I don't know. I don't know if they'll ever need to, but will on-chain providers of data for assets utilize them as a resource to appraise the values of those assets? Absolutely, because it's the fastest and easiest way to get the real value of a place.
Yeah, I'm looking at their website. This is fantastic. So but it seems like there might be some serious risks of another 2008, but by valuing it accurately, we're eliminating that risk.
Well, not necessarily eliminating that risk, because banks and institutions will do what they do, and you can't control who gets bailed out at what time by the government.
I can control it. I can.
Oh, okay. Well, then we're gonna have to talk.
Yeah, no. Susan, you were gonna say something. Sorry.
Yeah, there's a question that's been in the chat a little bit for a little while.
Did I miss it? Sorry.
About CBDC.
Oh, thank you.
Yeah. So CBDC stands for Central Bank Digital Currency. So that's so right now, this is a funny internal debate we have, which is how nerdy we are as a team. But what that means is, that there's a token that you might know if you've used Coinbase or things like that called USDC. And basically, it's a coin that for every $1 of a coin you have, they hold $1 in their reserves. So the whole point of this token is that it's pegged to $1. And so that if you want to trade with Bitcoin and do things on chain and stuff like that, it's the most efficient way to trust that one will still equal one the next day. There isn't the volatility of Bitcoin where, it's worth 10% more tomorrow, 7% less the next day, and to the minute, right? And there's no volatility, or there shouldn't be. And so there's that. Now, who controls that? There's one company called Circle that does it. It's a stable coin pegged to the dollar and all that. Now, all of the banks and institutions ever since the Genius Act, Genius Act is the rules that are being written from the government that are giving a framework to how banks and institutions can issue their own stable coins, and in a compliant way in the United States. Banks and institutions are participating. CBDC is like as if the dollar became digital as a token and the government controlled it all. And we didn't have paper money anymore. We only had the digital dollar, and the government has insight into every single transaction we make with dollars. And that's the scary thing that we talked about before. But if all of the banks and institutions are implementing stable coins, then JP Morgan has that same information, which is not much different than the government, or maybe it's the same thing depending on how deep we want to get into, talking about these things and get silly into conspiracies and stuff. But like the thing is here is that we're going into that world. We're going into a stable coin world where if all of these things are digitized, there will be some interesting things that happen in terms of like we said, you were asking, let me just double check. Kelly, I think the only one that's close to being stable is USDC in terms of a transparency standpoint. They're the most open with what the reserves are really holding, and they're the most American and regulated one of them all. Like Tether is scary, but people use it because it's one of the oldest ones, and they say they have assets, but they're not all dollar pegged assets that are like treasuries and stuff like that. They're like all sorts of things in the basket, which scare me a lot. And who knows what's inflated and what's not, and all that stuff. But that's if you consider the US dollar stable.
No.
And we shouldn't go down that rabbit hole. Talk about other things, but
we can do that in overtime. We can do that over time. No, but like it's like, but then you peg it to gold, which fine.
Yeah.
More.
And then so the CBDC thing is if a government was in charge of a stable coin, they had full insights. So you do what you want with that. I think a lot of people are very against it. A lot of people are very for it. To me, it sounds a lot like what we've talked against what China has been doing for many, many, many years, because they digitized their, or at least have done some pilots digitizing their money. And according to most, we don't want to be like China in most ways.
In many ways. Yeah,
in many ways.
Divya puts in the Zoom chat, is stable coin regulated or given they are similar to your bank account? I'm not sure I understand the question.
Well, there is stablecoin regulation now, and that's an opportunity in itself, if you want to go into it. But really, it depends, is the answer. The digital money in your bank account, is regulated. The bank is supposed to have certain amounts of reserves and things like that, but those rules have changed so much that they're recycling money and they really don't have the money, right? If we all went to our bank tomorrow and said, give us all our cash, they wouldn't have enough cash to give us.
Right.
Just doesn't exist. And so that's a problem. Stable coins tend to be, the legitimate ones, actually better than that in terms of knowing that something backs it. But, do you trust that, or do you trust going into Wells Fargo? I think most of us are fine having a Wells Fargo card in our pocket and using that. But
what do you have against Wells Fargo? It's like we have to dig deeper on
that. It's been my example ever since they had the big fraud thing with the opening of the accounts, because at the time the amount they had to pay in a fee. So it was my comeback to people saying the whole crypto world is a scam. And I'd say, that Wells Fargo just paid a fee that was bigger than the whole market cap of the crypto space, but you're calling this industry a fraud, but you happily use Wells Fargo with a smile on your face. Exactly. And that was my fun, response.
That's brilliant. Yeah, the uncomfortable crypto industry truths are that it's not uncomfortable in crypto, it's uncomfortable in the rest of the world. And this is
the biggest fraud that happened in the crypto space was a exchange that everyone said was the most regulated, most safe exchange in the world. It happened to give the most money to the both political parties of any other exchange or bank in the last election cycle and all that. They ended up being the biggest fraud, right? So was it the DeFi that was the fraudulent thing that made everyone fall apart? There's lots of scams there because, you know, when you open the doors to scams, there's scams. But at the end of the day, people breaking the law don't care what the regulation is. They don't care what the rules are. They're breaking the law and they're scamming people. They're defrauding people. And that's that's the issue. It's very unfortunate that it happened that way because it really was a stain on the industry, but it created a lot of opportunities too. And it tends to be how things go in brand new industries when there's a lot of money involved, unfortunately.
So Umesh asks, is it a good idea to invest in companies like MSTR, which buys BTC and gives dividends, or buying BTC directly? Very specific question, Umesh.
So Master is like it's the CEO of that company. His name is Saylor. His last name is Saylor. Michael Saylor. I met him a couple times. The dude is a financial wizard, savant, big Bitcoin permeable guy that has, you know, fortitude of steel. I was going to say something else, but I was trying to think of a better way of saying it. But this guy's crazy in like the best and coolest way, and is as brave can be. But it's, to me, it sounds really scary. I haven't in a while dived into the really specific, or dove into the specifics of how they do it and why they're doing it and all that. And it's very contingent on Bitcoin continually and gradually going up. If there's a big crash at some point along the way, which is pretty normal for Bitcoin, I hope, things don't fall apart like a house of cards. I know a lot of people who are investing a lot of money in that. Is it better than just buying Bitcoin directly? In my opinion, nothing is better than buying Bitcoin directly.
Okay.
And the what you lose in dividends and income, you gain in stability and peace of mind. Nobody that is one of, if Michael Saylor, if he's holding Bitcoin personally in some hardware wallet or even on an exchange that he trusts, that has insurance, is not worrying about that Bitcoin every day like the average person is worried about their MSTR shares. And I'm not the right person for short-term investments. I put myself in the shoes that I'm in because I'm very long. And I almost always will shoot myself in the foot in the short term to make the long decision, because that's just who I am. This is why I invest in
venture
early stage
capital. That
startups.
is 100% long. You're always long.
Yes, longer than long. And that's
Longer
just,
than long.
how it is, right? When you invest in an early stage startup at the traditional phase, you expect 8 to 10 years horizons to find out if a company is successful. When it's two people an idea, add a couple of years onto that because they're not even at that stage. And so, to me, it scares me. Am I scared of holding my Bitcoin? Not at all.
No. Okay.
Is there a chance that it goes to zero? Yeah, sure. There is a non-zero chance it goes to zero, but I don't think that's going to happen. And I treat it like a savings account. To me, it's another asset, but it's the best asset. If you believe that the dollar is going to be worth less tomorrow, it's probably going to be worth more. Bitcoin compared to the dollar, right?
Right.
And I have a feeling we're going to go into one way or another, the government's going to find a way to pump the economy and keep things going. And I have a feeling a few months after that, or a year or so after that, we're going to be wondering why groceries are double the price again. And it's just because they're going to print money and get it out there and do what they did in the past. I think that's my speculation. I kind of hope it happens because it'd be good for the startups in our space and startups in general in the short term. But if we're not prepared for it, and as people, we're not thinking about it, it's going to hurt the economy even worse than we're hurting today. And again, these short-term things always come back to bite people in the butt. Like what happened with money over COVID. Did people need dividend? Did people need assistance? Absolutely. But we got a drop in the bucket compared to what the world's largest financial institutions got from the government. And that created hyperinflation.
Yeah.
So
All right. I'm looking at
yeah,
the time. I got a couple more
yeah,
questions, and I want to open it up for the
yeah.
folks to ask you questions. Okay. Pivot here. Advice for founders. What advice would you give to the two people in a room who are, or maybe looking, who have an idea? They're trying to build a solution to a problem that's out there. What's some advice you would give them?
Just do it, right? Like
Just do it.
be brave and do it because here's the thing. You know, you do some AI talks. I got that from the intro, so I don't know what you're talking about on those AI things, but you know, it used to be that when I started my company, when I met Tim Draper in 2010 or so, 2008, 10, sometime between those dates, I showed him my company on a PowerPoint. And we started building some stuff, my partner and I, because we're technical. But if you're a non-technical person, it's really hard to build something from scratch, really hard what to show. So you did it in a PowerPoint. Lots of companies still do a PowerPoints and things like that, and they should. But if you come to me in a meeting and all you have is a PowerPoint, nowadays, I'm confused. I'm going, because you can build so much with AI and it doesn't take, you're not going to build, if you're not technical, you're not going to build as good of a prototype as someone who's technical, right? It's just not going to happen yet. There's going to be some things what to say to the AI to do certain things and do the whatever, but you're a Google search away from building a prototype of your idea and figuring out how to do that. And if
You're a prompt away from building
yes,
a proof of concept or a minimum viable product.
Exactly. And
Yeah.
you start Google searching different things. You can start Google searching AI design helpers and this thing and that thing. And all of a sudden, what used to take me as a technical person, I might use some pre-built framework. You might use a WordPress thing or whatever to build your ugly looking prototype or something back in the day. Now you can do in moments. Is it going to be scalable to thousands of users and this and that, and whatever overnight? Probably not.
Well,
It's getting there. It's getting there, and that's
I'm
scary. But
I'm going to push back on that. I may not overnight, but like within
no,
a few weeks, you can, if you build it on the proper infrastructure with the proper systems,
but
you
you
can.
probably will still need a technical person to help you with figuring out if it is.
You need
And
one. You need one
yes,
technical person who's smart enough to. Yes,
yeah,
absolutely.
beat it up a little bit,
Yes,
right?
please.
And where I'm also most of our companies, regardless of where they fall in the AI, blockchain, whatever spectrum, are in fintech. So they are dealing with a little more security and a little more regulation. So we can't just build something. But here's the thing is, if you want to build a product, I remember here's a good a hack for people. I remember a company of a friend of mine who wanted to build something. They were arguing internally whether they should build it or not because it was going to take a few months and a lot of money and time from their team to build this potentially new product. So what they did was they built a landing page on their website for the product, said it was in private beta, that explained what it was, and didn't put a sign up form because that was not enough to know if it was worth building. Because a lot of people sign up for products that they wouldn't pay for, right? And they needed to figure out how much they could pay it for. So they actually A/B tested different price points on the website saying, try it now for $10, try it now for $50. And it would randomly give different people the different price points. And when you clicked on that, they actually had you fill out a credit card form. And then when you went to submit your credit card, it would say a pop-up, we did not save your credit card information. We're so sorry, but we're currently at capacity. Or like it would make up some BS excuse why it wouldn't let you into their system, but we will notify you when we launch. And they would, in advance, you guys are in the analytics world, so
Oh yeah.
this kind of fits into what you guys, in advance, they would discuss internally how many users would be willing to pay for this product and how much money they were going to put in ads driving traffic to that. And if $1,000 worth of ads would get this many users to sign up, we will build the product. And they would make that in advance and they would stick to it. They were very disciplined about it. And they started doing that with different ideas for their product until they hit. And they eventually sold that company and made good money on this product. Ali
Is
is
it
asking
legal?
if that's legal. I don't know
Yeah.
if the credit card part is legal. This is in early days, like, this is 2008 or so, early internet. Even back then, think about it, like these are the days when PayPal launched because people were still being defrauded on eBay and stuff like that when they were doing this. So it was very early days, but also being early days, it was also a bigger feat to get someone to actually put their credit card on the internet.
Well,
People
that's
were
the
still
ultimate
skeptical of that.
confirmation.
Yeah.
That's the ultimate
Yeah.
hypothesis. If people are willing to give you your money, you know you're on the right track. You've reduced your risk and the customer's risk to the point where here's my money, take my money, please. I need that solution.
Yeah.
And if even if it's a fake Wizard of Oz, well, you click submit, buy now, here's my credit card, and you just send up an error, you say apologies, the
Yeah.
transaction didn't go through. That's got to be legal. You're not committing fraud. You're not buying anything. You're just confirming that someone's
There,
willing
yeah,
to
there might
pay.
be some rules with the putting in the finances, but if you're not saving it in any database or doing anything like that, you're probably fine. Um, uh, you know,
I think.
it's kind of in the early crowdfunding days, you used to get really worried because securities attorneys would go, raising money on the internet is illegal. It's considered securities fraud if you do it a certain way. And then you start going, thinking about it, and like, securities fraud is like jail time. This is a big deal. This is crazy. And you're thinking about it and going like, I really doubt the SEC is going to chase after the guy who is a gardener trying to raise money to buy a truck, right? But at the same time, you can't do it. But you have to take certain things with a grain of salt. They never went after any of the, it's really sad in the crypto world. They went after certain things because they were trying to, make a point. But some of the biggest frauds that happened, they never even went after, which is really, really sad. So you just have to be careful. I don't think there's a legal issue with that, but anyway, I don't know if that's the best way anymore. There's other ways to verify market opportunities and stuff nowadays, and so many products um, don't have paywalls the way they used to. It's a lot of freemium stuff and getting people in and actually understanding your customer in a more meaningful way. And it's harder to play those arbitrage games with running ads for businesses anyways now. Reaching your customer you have to be more creative than that. Back then, 90% of the internet used Google, and that was their homepage, and that was how they found places. And now it's more through social media and through texts and everything else that people do. There's just a different discovery for products than there used to be. So it's a lot more complicated these days.
All right, I love it. Looking at the
Yeah.
time, I'd love to open this up to Q&A. So, folks, if you have any questions, please raise your Zoom hands. I will call on you, and we'll do that for a little bit of time. And then, if you can stick around, Alon, how much time do you have?
I have until my kids knock on the door and say it's dinner time, but I
Okay.
think we're good. I don't smell it yet.
All right. Good, good, good. Yvonne.
Great. Thanks, Todd. Hi, Alon. Question that I have on this, I've always struggled. I'm in the wealth management world.
Yeah.
And, I see our portfolio companies are getting presented tokenized products, the idea of the tokenized money market funds and all that kind of stuff. But there's a couple of things that the use case is not that clear for all of us in the sense that DTC seems to be working pretty well.
Yeah.
And I think there's a bigger concern with the friction is actually a safety valve, right?
Yeah.
So we're removing friction. Was there really a complaint about settlements take too long, this is going faster, or are we just adding more risk to the entire system?
So I think when you talk about DTCC and what they want to do, so DTCC is one of the biggest like clearinghouse groups in the world, and they made the announcement that they're going to allow the institutions and groups to tokenize their shares, and eventually that'll open up some things. So that's actually Onera, one of our portfolio companies, working directly with DTCC. Their CTO is a guy named Dan Doney. He was part of the crowdfunding world alongside us. So that was like a big win for our whole kind of community when somebody that we've been working with and talking to since 2010, 2012 became the CTO of DTCC. Like I love that. This means like one of us is at the helm, and I think that it means that there will be some really great products available to everyone. I don't think so. When we talked to JP Morgan one of the times, Onera went, we can make transactions at T0, which means instant. If Yvonne is legally allowed to buy something from me and I have it ready and we meet requirements, we click a button and boom, it transfers. And JP Morgan's like, why would you ever want that? Like, and they're like, there has to be something in the middle, not because there's a holdup, but sometimes you want, for security reasons, to pick up the phone and say, Yvonne, did you mean to click that button? This is unusual for you. Whatever, all the different things that you might want to have, you might want to put there that make it a better product. The things you want to remove are the things that are friction and slowing it down because of paperwork, bureaucracy, all those things. They're fixing that. And what DTCC is tokenizing are all things that are regulated assets, like money market funds and things like that. You can't anonymously buy a money market fund, so it will never be allowed to be, and it'll never be on Uniswap, that DeFi thing that I was saying. You'll still have to go to you or my oldest brother is a money manager too, and you want to buy that money market fund, you're still going to do it through them or through Schwab or through Fidelity and whatever you're using. But the reason why DTCC is doing it is more because if it is distributing yield and it's tokenized, you may be able to do it in a way where it's automated, where there isn't checks being sent in the mail. There may not be these things. It makes it a little faster. That's a micro thing. The main reason is a buzzword. I put this on LinkedIn. It's like going to be my favorite thing I'm going to talk about this year, I think, when it comes to those kind of things. It's collateral mobility. And collateral mobility basically means we all have shares and stocks in different places and stuff like that. They're not tokenized. They're not digitized. If they're in Robinhood, they're only in Robinhood. If they're on Schwab, they're only on Schwab. If they're with Yvonne managing them for us, they're only with her. Now, if I could tie those assets to my name in a digital way that's verifiable, regardless of where they're moving and what they're doing, and if we can maybe even have insight to touch them in a compliant way from one financial institution to the other, or maybe I'm just a Schwab user.
Yeah, so that makes sense. You're perfecting the collateral.
You're proving that I have it. Now, when I go to buy a house, it's much easier for them to know I have that collateral. Or more importantly, remember when I said if I'm in the top 1% of Wells Fargo users, I can go and talk to a banker and say, I need $100,000 loan. You know what I have in the bank. You know what assets I have. Or it's more, I need a $10 million loan because I want to go do this or that or whatever. And you know what I have. And you want to see the shares of Amazon stock I have? Well, here it is, whatever. You can do that. And that person will spend the time with you and will put together something and could give you a bespoke agreement to lend you money. Now, that only exists for some micro group of really wealthy people in these banks. And those people hold the majority of the assets, right? But with everyone else, maybe the top 50% instead of just the top 1%, those people should be able to borrow against those assets as easy it is in DeFi or in some places to borrow against your Bitcoin. With one click, I could borrow any amount of money that I want against my Bitcoin and hold my Bitcoin if I keep under a certain threshold, right? That should exist. With your home, it kind of exists, but you still have to do some verifications and things like that. But with no other assets do we have it. Maybe if you're a Schwab user and you have a lot of one asset, you borrow against it in a small way. But what they're doing is they're creating a way for them to lend you more money. And that product, I spoke at one point with the head of a group at Citibank, and they estimated that they could be lending to just their private clients in this one particular group hundreds of millions of more dollars a year if they can digitize those assets and tokenize them and understand them better and just have real-time values instantly in their dashboard. And that's, I think, the beauty. That's where they're going.
It's really interesting. I was thinking about risk more in terms of the velocity of money. You're reducing the friction. And if we're going to go to settlements that are going to be instantaneous settlements, I'm imagining bank runs and other things like that. Yeah. But we are adding risk, but you're adding risk on the leverage amount.
Yeah. And I would hope, I don't trust the banks to do the most safe thing, but the thing that will make them the most money probably. And there's a long, rich history of them having a backstop that will bail them out. But if you did it like these DeFi groups do Bitcoin, and you keep it at a really safe loan to value ratio, and I'm not talking about like on a home where you can go 80% or whatever, on Bitcoin, on things like that, you could go at highest like 40, 50%, which is, in my opinion, too risky. I would only go to like 10%, but I'd rather take 10% of the value of my Bitcoin in a loan than sell 10% of my Bitcoin, pay taxes on it, and then not have that Bitcoin anymore. Right. So it'll create opportunities, in my opinion.
I appreciate it. Thank you.
Thanks, Yvonne. Victor. And by the way, folks, if you have any questions, please raise your hands. Now's the time.
So, Alon, thanks so much for talking with us tonight. It's really interesting to listen to not just your content, but your long view perspectives. So I have an infrastructure question along those lines. If you fast forward to a time when some of these things that you're imagining today, along with some of the things you're actually building today, are all in place, and let's say blockchain becomes ubiquitous for monetary systems around the world. AI becomes ubiquitous, agentic AI becomes ubiquitous. Do you have any concerns about, or I'll ask it differently, what are your perspectives on the infrastructure to support all that, whether it's energy itself or compute?
Yeah, I'm a little worried. Like, it used to be the big thing with Bitcoin was oh my gosh, it uses so much electricity and all that. And that's true, but so does
And
all
storage, right?
sorts
The
of, yeah.
replication aspect.
Yeah, now it's a drop in the bucket compared to how much is being used on AI. And that's a major concern, but I think everything has to drive towards more efficiency and things like that. But also Bitcoin as a blockchain would not be the right blockchain to be using for these use cases, right? And Ethereum is probably the front runner for the infrastructure, but it's not going to happen on mainnet, right? They have these layer twos, they call them, and different subnets and different things like that to run things on. And there's a million different things. And I think that the future is there's going to be a bunch that we've never even heard of, or different ways to do it. And each one has a trade-off, right? If it's faster, it's usually has maybe a little less security, or it has a little more of something else. And things like that. And there's trade-offs. And where I'm getting at is every application and use case will have a probably best in class version of what they do. Kind of like what we were talking about earlier, right? Like, do you use JavaScript, or do you use HTML5, or do you use whatever you want to use for whatever use case and thing that you're building? It'll be what the banks and institutions and groups, if that's what we're talking about, will be adopting. And so it's going to be a preference thing. And I think also it'll be one of those things, just like programming languages, just like every technical decision, you'll ask 10 engineers, they'll give you 20 different answers as to what the best one is for each use case. At the end of the day, it'll be a business decision, right? Nobody back in the day would agree that .NET was the best programming language. But what was the enterprise programming language of choice for all businesses building in the enterprise? .NET. Why? Because you could pick up the phone and yell at somebody at Microsoft and say, help me, when something broke, right? So there's business reasons for building in different things. Nobody wanted to build in the enterprise on open source software, things like that, because what are they going to go into a message board and find the guy that's the expert and ask him on Stack Exchange how to fix a problem? They wanted to be able to knock on a door, right? Or pick up the phone and get something done and get resources. And so that's why they did it. That's how it's going to be in the future. There's already all these different scaling solutions people are doing in AI. Everybody that has databases, there's these vector database companies and providers now that are making databases that we thought were as efficient as could be, 6 months ago, significantly more efficient now, specifically for AI agents to access the data. I remember when caching for search was the hugest issue that MySpace had, right? It's not, and so they did a deal to implement Google search. It fixed that problem, and it paid back the full amount that Fox bought them for. because they started making money from Google because Google could serve ads in there. And it was the move. And that actually was, I think, the tipping point that made MySpace have less traffic than Google. So at the time, MySpace actually had more traffic than Google until after that. Interesting, the way things go.
It is. And I have a more subject matter question that was inspired by the last conversation with Yvonne. Did I hear in between the lines that you may be alluding to individuals having their personal individual blockchain as their infrastructure for getting their resources combined and mobile and interchangeable in that?
I wasn't thinking each person have their own chain, but I was thinking a lot of institutions might have their own chains for different things, or layer twos or things like JP Morgan has their own blockchain that they're going to issue certain things on and do certain things. Why? Well, one, JP Morgan in itself is bigger than, the next probably 10 financial institutions combined or whatever. I don't know if that's exactly true, but you know what I'm saying. Maybe if you took number 4 to 14, they're probably bigger than them combined, right? But where I'm getting at is different people for different use cases are building things purpose-built. Onera, as I mentioned, that company, when we were talking about building it in the early days, we thought we would build a purpose-built blockchain for securities. That was the original premise. Then they realized a bunch of people were doing that, and it actually made more sense to build the rails for financial institutions to navigate across all of them. And so they built a product and a consortium of those financial institutions. So there'll be just so many. I think there'll be so many, and then there'll be so few at a certain point, right? Think about computers. We used to buy Gateway computers, Dell computers, Acers, and all the different companies. You go into Costco, it'd be like 5 or 7 different brands just at Costco. You go to CompUSA, there's a million different brands of computers. Now 90%, buy one or the other. And then, there aren't big computer brands, right? There might be certain products and things, Western Digital and this and that.
Right. And then just one more follow-on, because I think I may have misunderstood something, but in the conversations, it sounded like the point of convergence for all of the digitized financial assets that one might participate in is the individual, not an institution, not a single institution, because that already puts barriers between institutions, right? But if I'm the individual and my digital assets are all focused on me, and then I was, I guess, imagining that I would need a personalized infrastructure to be able to manage, secure my own assets, but also interact as I choose because I'm starting from this point of convergence of all of my digital assets.
It's a good way of looking at it. It's everything. If we think about technology in general, everything is a lot less sticky than it used to be, right? Like, so use Cash App, or you use your bank, or you use one app and you just don't like it anymore. You bounce to another one. And it's, businesses, it's not like, I've got an insurance guy and I just deal with him for everything that I do. I still have that because it's like a trust thing and it's my brother's friend. But like, does anyone have a travel agent anymore, right? And do you really give a crap if you bought it on Expedia or Priceline or directly on the Marriott Bonvoy site or through your Amex card? It's all incentive based now. You're just like, where did I get the best price? And maybe I got some points, right? So that tends to be how that works. We all live on our phones, right? Like, so we have the Apple wallet on our phone, or Android wallet, and you double click on the side of the phone and you see which card you want to use, you tap on it and you go. The difference between Wells Fargo or any other thing is just so minuscule now. And so I think in this world, there's 2 ways to look at it. I think there's the legacy way of building moats and going, I'm going to block everybody out. And then there's the new way, the startup way of, I'm just going to make the best product. Because the bridges exist whether those people like it or not. And if you work on trying to break the bridges every time somebody builds a bridge, you're not focused on making the best product. And the people who have the best products are going to win. and the people with the best support, user experience are going to win. And so I think that's the real beauty. And assets are going to become digitized because it's where everything is going. It's the natural progression. The banks are going to have the biggest advantage at the beginning because everything happens in the enterprise, right? Like everybody used emails at work before they decided it was a good idea to use it at home. Everybody used smartphones, Blackberries through work till they decided I could play, Farmville on my phone, or whatever, right? And that's how we've adopted new technology traditionally. I think that's how it's going to work. We're going to get these really institutional money market products to be digital and all these things over the next few years, and we're going to deal with it in a professional way and through maybe our work and businesses and things like that. And very quickly, it's going to, our kids are going to be swapping tokens on Roblox and doing things like that in a
Are
way.
they already doing that? They're already doing that.
Yeah, but it's gated. It's not really real. If one of the coolest things you could do is if you have kids that play Roblox and whatever game is their favorite game at the moment, ask them, wouldn't it be cool if you could take your seeds from Grow a Garden and put it into the Brain Rot game? And then they instantly go, oh my God, it's so annoying that I can't take my thing from this game. I spent years getting this game amazing, and now I'm playing this game and I have to start from scratch. I can't even move it. And this is worth so much money. Like these kids get so passionate about it, and you realize like that's where we're going. Like these kids are going to graduate from that to the older kid games and things like that. And then, we're going to blink and they're going to be in college and they're going to go like, why do you have dollars in your Cash App? Dollars are chopped, bro. I'm going to use sorry, that's my imitation of my daughter.
I don't know if it's going to be dollars or but we'll
you know
see.
what
it might
I mean,
be something
like,
else, right?
The fact that you're still using something that's as archaic as the fact that these things aren't interoperable will be confusing to them, right? As confusing as it is to people when we say, I used to keep change in the little ashtray of my car, and I was a poor college kid, and I'd pass by a McDonald's or an In-N-Out, and I'd reach for the change drawer and have $1.20, $1.07, so I could buy a In-N-Out fries plus tax, right? And they'd go, why would you have change in your car at all? Why were you even using change to pay for something? Is like crazy to most kids, and then or start explaining like a tape deck or something,
I
anyway.
am so old. I have change in my car cup holders. So yeah. I think we got time for just one more question. I'm going to go to Kelly, and then I'm going to go to Susan. But what Ali just asked, what's your take on Algorand as a platform?
I don't know enough about it to say something meaningful other than some really smart people that I know and a few people that I trust have built some things and are doing things on Algorand. So I, that's not nothing. That's
It's
important.
something.
Yeah.
It's something.
Well, there's so many new blockchains and things. They're not one of the newest ones. They've been around for a long time, and there are people building on it, and there's some interesting things. And every once in a while, somebody pitches me something, and they're building on Algorand. So there's some meaningful stuff going on there. But I take the blockchain with a grain of salt when I'm talking to entrepreneurs because I care about them and where they're going to, as long as they're not married to some kind of exclusivity in their minds or legally on a certain blockchain, because that is an issue in my opinion.
Awesome.
You wanna be flexible.
Good advice. There you go. Kelly, then Susan, and then we'll end the recording and stick around for some overtime.
Thanks, Alon. That was great. I appreciate you coming by and taking time away from the kids. And by the way, I just wanted to say Andrea Brimmer's here, who's also Cal Lutheran Hub 101. So she's come
Heck
by
yeah.
Yeah.
So I would toss the ball to her, but I don't think she's going to appreciate that. So, hey, I do have a question though. I mean, we talk a lot about blockchain, a lot about but what's interesting to me is the way you invest, and you are founder first, which is, I think, is sort of near and dear to my heart. So my question is, and it might sound like a silly question, but I face this quite a bit. Once you fall in love with a founder, what's the number one reason you don't invest when you look at their company?
So I would say the number one reason we don't invest is it's kind of like two, but I'm trying to think. There's like two main things that make us not invest. We have a conversation. So I used to kind of say this in my head to myself because I was like 90% sole decision maker. Now I go to the team and I say out loud, what's the first thing we're going to do after we do this deal, if we do this deal, to help the founder? And if we don't have an overwhelming list of a lot of things we want to do, there's a problem there. And for example, I've met founders that are building blockchain verifiable things for like healthcare records and stuff like that. And I remember one of the times loving the founder, thinking he was so sharp, loving the co-founder, thinking that she was amazing, really brilliant people. But it's a world that I don't know very well. I didn't know who I would introduce them to. I didn't know how I would add value. And because we're first, one of the things to make the business model work for us is we ask for a lot. We write a relatively small check that's more symbolic than meaningful for dollars and cents wise. And we ask for a lot of equity. And I can't take that much equity and not be hands-on valuable because we're not traditional in the way of the average VC where you write a check and meet quarterly or meet once a year and just get updates. Like we are in the trenches with them and we're actively working with them. So that's usually the number one thing is we might meet somebody really smart like through an introduction and go, this is in a world we can't add that kind of value to. And then sometimes they're already too brilliant and it's a little too late for us for the business model, which is why we're in the process of and why we recently started raising our fund so that we could write larger checks. And our old fund, with the first version of our studio, was there just to double down on our winning teams. This one, we're kind of going double down on the winning teams and invest in opportunities where we missed them at that two people in an idea stage. Still has to be early, but it's not quite as early. And so those are really the main reasons why we don't. We recently actually didn't invest in one because the guy it wasn't a rounded out enough team. We didn't trust he could execute, but we loved the founder. And we kept in mind, and we even told him that we're going to keep you in mind for potential opportunities if we find a co-founder for you that rounds it out, because the guy was brilliant. He was a good sales guy, but he wanted to build something super technical and super complicated in the financial world. And he claimed that he could do it himself, but he was, a self-taught engineer that couldn't do what he said he could do because I had my CTO have a conversation with him, do a little code audit, and he's like, this isn't ready for prime time. This is a killer prototype, but this is never going to be able to hold millions of dollars and feel trustworthy. And so we just couldn't get
well, let me ask you the reverse of that is what is it that what is it that you look for to fall in love with the founder? What is their main characteristics that you find so important?
It's usually that infectious passion plus their ability to get shit done, like their ability to actually execute. There's so many people you meet and then you meet them a month later, they're just as excited, but nothing's changed in a month, and that's weird, especially in this day and age where 1-2 people can be very, very, very productive. So my favorite thing is, knowing like sometimes we follow up when like a deal is on fire and like we really want to work with this person, we really are excited. But sometimes I'll tell the team, give it a week or two. Let's see if they follow up with us because they're desperate to raise money. They're wanting to do it. I want to know that they're not just maybe technically able or they're just really good at it, but they're also have that fire in their belly to sell the product, to evangelize it, to raise the money. Because every once in a while you meet, and we've made the mistake of finding the smartest technical people in the world that don't know how to sell their product. Like can't be that extroverted salesperson, or they don't have a member of their team that can do it. Sometimes you can hire that kind of person, but it really helps when one of the founders that owns half the company or owns a significant portion of the company is one of those people. So to me, it's always the ability to execute, and also if they can demonstrate that they've executed something that I thought was impossible or insane, like in the insane and the just wild, that I always love too. When you go, nobody's going to pay for that, and they're like, actually, let me show you 17 people who are already paying for it today, and you're like, oh crap, that's amazing. Or hopefully it's 17,000 people, but you get the the picture. Those kind of things I always love, when they find opportunities that you don't even believe exist.
I would love, if Yvonne ever comes back to town again, I would love Yvonne and you and I to sit down for lunch and have this very discussion between the three of
Let's
us.
do it.
Fascinating.
Absolutely.
Yeah.
Yvonne, where are you?
I'm based in Dallas.
Oh man, you
Kelly
gotta come
loves
to
that.
Southern California. You
Yeah.
gotta come to Southern California. It's the place. And that goes with everyone. Anybody find themselves in Southern California, message me. We'll meet for lunch.
I'm here.
Yes,
Well,
please.
I'm already gonna bug you about meeting again for lunch, so don't worry about that.
I'm here. Anyway, thank you so much for Alon, for this. I really appreciate it. And this is a world that I don't know too much about. I do have a blockchain application in the state of Montana, but I know nothing about it. I just know I own a piece of it. So
We should I should learn more about it. Just maybe we can do some stuff. But the thing is, anyway, I want to throw this out there for anyone. We're not kind of married to only doing blockchain deals. If they fit into our kind of family, and we're kind of leaning into some categories, like a lot of prop tech real estate stuff, because I mentioned the real estate stuff before. And we also want to do some things. We're about to do something. We're doing something in music right now, but we're also potentially doing something with sports and analytics soon. And I think those are the categories we kind of really want to stay in, is the fintech, prop tech stuff, and kind of sports and music. I think partly because it's what we're really excited and passionate about as a team. Me more the music, the rest of my team more the sports. But it's to us, I think that when you stick into categories that you're really, really passionate and excited about, you are more invested in it, aside from the capital and the energy and everything. So anyway, if any of you know of someone, or you yourself are starting a company, when you think you're getting things together and it's still too early to pitch, that's the right time to come hang with us. That's the right time to come get lunch with me, because we can be really the most helpful at that stage. And I say that to other investors. We co-invest a lot with a lot of other VC firms. And I tell them, when someone pitches you and you feel like they're brilliant, but they're not ready yet for you, they're not at the stage yet, please introduce them to us. We actually had a couple of VC firms invest personally in our fund, in our venture studio, because they wanted our deal flow to their fund. They wanted to know that we're gonna share the deals when the companies grow. And so to us, that's the greatest thing in the world, because the biggest constraint at a certain point for us, once we get a company out the door, is helping them raise more money. And we obviously have Tim Draper and Draper Associates and some of those funds, but they're not investing in every single deal that we do. So it's always good to have a network. Well, I totally digressed on that. Early stage, please send them my way. If you got kids, friends, family that is starting a company, please send them to our website. Send them to me. My email address is easy. It's just ALON, my name, at our website, dgb.vc. So please, I'll put it in the chat too, but feel free to make introductions to any entrepreneurs that are getting started.
Kelly, thank you. Susan.
Yeah, Alon, this is so wonderful, very informative, and your stories are really fun. And so thank you. We'd love to have you come back too if you're interested. And you've already kind of answered this, but I'll still ask it. So, what besides sending you people that are early stage or just have an idea, what else can we do to help you?
Support startups, follow what we're doing online if you can. I think that's really the main thing. Obviously, I mentioned we've raised funds and things like that. I'm not soliciting right now. If anybody's listening that's saying I'm not supposed to be saying things out loud, but if you know investors who are interested, to me, it's networking with investors is really important. It's a part of my job, regardless of the fund, because like I said, we have 20 babies that are growing and need sustenance, and we need to meet with investors. And some investors fit certain categories great, and you never know what happens. And I actually love finding the people who are really passionate about certain things, regardless. That would make good advisors for our companies and stuff like that. It was always great to connect with individuals like that. So to me, it's all about the network and the people. So, those are the things that I'm doing right now, that I'm spending the most time on. Uh, um, I should throw out also, I'm in Southern California. We do have an office. My partner, David Blesnak, is based in the suburbs of Detroit. We have an office in Troy, Michigan, where we have a few of our team members, and two of our companies are based in that building. That was one of the big drivers of having an office there too. Lit Financial, our mortgage company. If you need a mortgage, try to get a rate through Lit Financial. And if they give you, they're in almost all states now. I think New York is one of the last ones they didn't get yet if you're in New York. But they're one of the fastest growing mortgage companies in America now. But I'd love to know if you got the best rate going through them or not. So they say that they're beating everyone and doing the best rates, but I want to know from people really doing it if they gave you the best rate. And then either way, once they give you a rate, message me, and then I'll text the CEO and be like, you got to hook this person up. They're great, and see if we can get a better rate. But I'm really interested. They say like they're growing so well. I believe obviously their claims of having the best customer support and doing things differently. I think the main thing they're doing differently is treating their loan officers better than Rocket Mortgage and all the rest. A lot of the people are from Rocket Mortgage. I don't know if anyone knows this, but the thing everyone says now in Michigan is Detroit used to be Motor City. Now it's Mortgage City. That's a thing apparently. So anyway, that they're there, and so if you ever find yourself in Detroit, Michigan, want to hang out with some startup people, I can connect you there too.
Awesome.
Wonderful. Thank you. Thank you so much.
Hey, thank you everyone for having me. Really happy to be here. Thank you, Kelly, for introducing me and inviting me. Todd and Susan, this has been great.
Thank you, Alon. This is really a pleasure and an honor. I'm going to end the recording here. Please do stick around, folks, for some overtime. And tomorrow night, I've got my office hours, so you're all invited to that. Thank you all for coming. I will see you next time.